welcome to this video. In this video, I'm going to be showing you the simple strategy of using the tweezer top and the tweezer bottom in trading. It's a very simple strategy. You just need to know how it works and how you can profit from it. So first of all, let's talk about the ideology about it. Whenever you see the tweezer top or the tweezer bottom, is a signal that the trend is already ending. Whenever you see the tweezer top, you know that the trend is already ending. When you see the tweezer bottom, you know that the downward trend is already ending. And how do you get into it and how do you profit from it? I'm going to be sharing in this video. So first of all, I'll give you the ideology on the tweezer bottom and the tweezer top. They are just opposite of each other. So the tweezer bottom candlestick, you will see two candlesticks that has there's a bearish and a bullish candlestick, but they have the same body, and from there you can know what is going to be happening. So when you see, there are two ways to trade it. You can trade the opposite trend and you can trade the reversing trend. So whenever it forms, immediately it forms, you can just enter a trend that is going opposite of where it formed. If it formed at the bottom, you just enter a trade that is going opposite the trend, which is like a bullish movement. When you see it at the bottom, it will form a bullish movement. When you see it at the top, it will form a bearish movement. That's how to trade it. And then the other way is that whenever it forms, you will always see a if it forms at the bottom, a tweezer bottom, you will always see a bullish movement first before it will fall, before it will reverse back downward. So how do you enter? When do you enter? Let me give you that immediately. So whenever it forms at the bottom, a tweezer bottom, it will always pull up first, and then after it pulls up, it will always create a spiking candle. It will always create a spike, and after it creates that spike, it must create an engulfing candle before you know that the trend is already reversing. Like this is already the engulfing candle. As it engulfed, it started falling down. So whenever it creates the tweezer bottom, it will always pull back up. So after it creates this spike and creates an engulfing move, that's where you enter. And then when you enter, you set your stop loss like 50 or 70 pips just for safety, or maybe 100 away from the spike. That's how you trade it. And then it will move like probably 200 pips, 150 pips, or 100 pips, but it is like a should I say a 95% rate of accuracy. So this is the tweezer bottom. Let's see the tweezer top. You can see the move, like it fell and fell and fell and fell, like it was so strong. So let's see the tweezer top. All right, so this is a tweezer top. This is a tweezer top. Yeah. All right, so after it formed, the market went opposite, like it came down. Like I told you, you can either just trade that move like as it is falling, or you wait for the confirmation for it to like reverse. So after it went up, it formed at the top, it came down, and then it created this spike here at this place. It created that spike there, and then there was an engulfing move, a bullish engulfing move. The moment that engulfing move formed, you just need to enter and then you put your stop loss. You can see the movement. It was so like over 400 pips. You can see it, right? So, and then the market went again, and then it created, let me look right now to see another probably tweezer top. Okay, this is where the market is closing. This is for gold in the 5-minute time frame. The market is already ending or closing with a tweezer bottom because the trend has been coming down. So what you will likely see when the market opens is that gold is going to spike up to around this environment, around this area, because there's an FVG there and probably there's also a resistance in that zone. So you likely see it do that pull up. But before you enter, always wait for the spike and the engulfing candle. The moment it does that, you will see gold fall like probably even below the like 4,600 plus before it will reverse back up. Remember, the ideology of the tweezer top or the tweezer bottom is that it signals the end of the trend, but it doesn't just end immediately. It will always do a spike up, spike down, and then go up. That's how the movement can back test it on the 5 minutes time frame, 15 minutes time frame, or 30 minutes time frame. You will always see that happen. So that's just the idea about the tweezer top and the tweezer bottom trading strategy. See you in the next video.